So first, we're going to hear from our friend Nate Jefferson, our personal finance reporter. Looks like Nate, your article this week is titled "Investing Made Easy." So to start off here, can you tell us a little bit about that?
Yeah, absolutely. This week I digged a little bit into ETFs, particularly, that was a struggle because a lot of people are digging into the stock market, right? They want to invest into individual stocks to grow their wealth. I mean, the stock market is known for being one of the largest vehicles of creating wealth, but knowing that investing into individual stocks is pretty hard. You have to do a lot of things to make sure you're investing to the right things to see the right returns. And so what I focused on this week is the best way to invest your money if you're not that experienced or knowledgeable with investing. And particularly, I dig into how to invest and particularly what is investing into ETFs, also known as exchange traded funds.
So what do exchange traded funds do, Nate? Can you tell us a little bit about them and why we should be investing in them?
Yeah. So just think of ETFs as a basket of stocks, right? So instead of one single stock, you have a whole basket of stocks. Now, these stocks can typically mirror a market or another index, just so you are able to diversify some of your risk. Now, when it comes to owning an ETF, it's not similar to a stock. So when you own a share of a company, you own a piece of that company. When it comes to the ETF, you're not owning any of the shares within that ETF. You're actually owning the ETF itself. So now you're asking yourself, okay, so how is the ETF managed? Well, there's a manager that picks and chooses what stocks he feels like will be able to give this ETF the best performance. From there, you could dictate whether or not this is the right investment for you.
Awesome. So I know this week we kind of want to take a little bit of time to dive into everybody's story too. So I'm reading here, and I want to know, Nate, a little bit more about the managers. Like, what do they do as a manager? So if I was an ETF manager, what's my job? What am I doing, man? You were talking about picking stocks, but what are the stocks? What are the stocks that I'm picking?
Yeah, so it's all based around what the fund is supposed to replicate. Now, I talked about it replicating markets, but it can also replicate specific investments like bonds or um, commodities. So it's all about what the goal of the manager is, and then from there you can dictate whether or not the manager's goals align with yours.
Yeah, Nate, I have a question. With so many ETFs out there, it can feel overwhelming to select one that fits your investment strategy. This may seem like a loaded question, but how do you choose an ETF that fits your investment strategy?
One thing I would say for me personally, I look at the ETFs that one are aligning with some of my values. So things that I'm looking for within a company, whether or not they're trying to reach targets within a specific demographic while doing that in an ethical way. Some of the intricate details that I dig into personally, but when it comes to performance and what you're investing into in particular, you might want to look at whether or not the market matches the market that you want to invest in, whether the stocks are something you believe might be profitable in the future. Just, I see it as investing into individual stocks, but not really choosing all the stocks that you want to invest in, just understanding a specific industry that you want to get into. And then from there, trying to maneuver your way into finding an ETF that mirrors that.
Awesome. Nate, I got one more question here for you. So if I was an individual investor and I decided that I wanted to buy some ETFs, where would you say I should get started?
Yeah, well, there's an ETF called, it's three letters for the abbreviation is SPY, SPY, also known as Spider. Now, this is an ETF that mirrors the S&P 500. And what the S&P 500 is 500 of some of the best companies just grouped together in one index, right? And so what the ETF does is mirrors that index. And so typically when you hear about the market and people trying to beat the market, it's in reference typically to the S&P 500 along with a few other indices. Now, in order to see returns, a lot of people try to beat the market, But instead of trying to beating the market, you have to be very knowledgeable. So instead of doing that, it's best just to invest in the market. And you can do that by investing into the S&P 500 ETF. And with that, you're probably going to see about a 6 to 8% return each year. So that's the best bet I would do if I were you.